Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Imagine this, you navigating the digital battleground, hackers striking at machine speed, threats evolving faster than any human can track. In this relentless environment, could SentinelOne, with its groundbreaking AI that acts truly independently, be poised to dominate endpoint security? Or is this high-stakes market destined for a winner-take-most outcome, where innovative players carve out significant but not absolute dominance? Get ready, because we're dissecting SentinelOne's competitive edge in autonomous threat detection and exploring what this means for your portfolio. Our mission today is to give you a comprehensive understanding of SentinelOne, from its core technology to its strategic advantages and future trajectory. To truly grasp SentinelOne, we need to begin with the people driving its vision. Let's look at the leadership team guiding this company.
Right. At the helm is Tomer Weingarten, the CEO and co-founder. His background is really key here. He comes from Israel's elite military intelligence, Unit 8200.
Unit 8200. That's significant in the cyber world.
Absolutely. And it's clearly shaped SentinelOne's entire strategy around autonomous AI systems that, think and act on their own to neutralize threats in real time. Tomer led them through their 2021 IPO, raising over $1.2 billion, quite successful, and just recently, a pivotal 2025 partnership with AWS. That's set to really accelerate their AI-enhanced cloud security for enterprises.
That background certainly underscores the AI-first approach. Who else is shaping their operational strength?
Definitely. Then you have Dave Bernhardt, the CFO. His experience is incredible. He came from Salesforce.
Salesforce. Wow, okay.
Yeah. He scaled their finance operations from $1 billion up to $20 billion in revenue. So he knows scale. He's been key in optimizing SentinelOne's costs, hitting that impressive 72% gross margin in FY 2025, largely by streamlining AI R&D.
72% gross margin. Got it.
Then there's Rick Smith, Chief Product and Technology Officer. Strong track record, Symantec, Oracle, leading AI integrations. Under him, they launched Purple AI in 2025. That's their generative AI for threat hunting.
Purple AI. Heard a lot about that.
Yes, and it got them significant recognition in the 2025 Gartner Magic Quadrant. His team's also focusing on agentless AI for cloud.
Agentless. Explain that a bit more.
Sure. Think of it as cybersecurity that doesn't need complex software installed on every single cloud server. Much easier deployment, way less disruptive, and it boosts their autonomous response times by up to 10 times.
10 times faster response. Okay, that's a clear focus on efficiency and speed. What about the customer side?
That brings us to Aaron Ashkenazi, the Chief Customer Officer. His background's from Checkpoint Software. He's laser-focused on customer-centric AI innovation. His 2025 Customer Success Program, it really stands out, boosted their net retention to 115%.
115% net retention. Very strong number.
It is, and they did it by tailoring those autonomous features right to customer needs, especially critical for sectors like healthcare, where breaches are just devastatingly costly. What's clear across this whole team is that unified expertise, all converging on AI autonomy. They're putting their money where their mouth is too. 30% of R&D goes straight to advancing behavioral AI.
It's clear this leadership is deeply aligned. How does this founder-led approach, with Tomer Weingarten still so involved, influence their long-term strategy and innovation?
That's a crucial point. Tomer's deep ongoing involvement, from product roadmaps to guiding acquisitions like that 2025 stealth AI startup buy, is absolutely foundational. This hands-on, founder-driven style often correlates directly with the long-term outperformance you see in similar firms. He navigated the tricky 2023 market downturn really skillfully, for instance, while still growing annual recurring revenue, ARR, by nearly 30% in FY 2025.
Impressive growth during a downturn.
Very. And this alignment extends to individual investors like you. 60% of executive compensation is tied directly to revenue growth and customer retention. It fosters a real long-term view.
That definitely creates a strong sense of purpose. Can you maybe sum up SentinelOne's core mission and its culture?
Certainly. Their mission is crystal clear. Empower organizations with autonomous cybersecurity that defeats every attack, every second, every day. Their whole ethos is one platform to protect everything.
Simple, powerful.
Right. And the vision they're building. It's a future where AI agents operate completely independently across endpoints, clouds, identities, basically eliminating the need for human intervention in most threat responses. Tomer's talked publicly about this vision of a self-healing digital ecosystem powered by generative AI like Purple AI.
Self-healing. Interesting concept.
It is. Internally, they have this one Sentinel culture promotes innovation, accountability, agility. They invest in AI ethics training, run collaborative threat hunting challenges, keep a relatively flat hierarchy, and it shows results: 90% employee retention in 2025. They have this ambitious goal,
Yeah.
100% autonomous response coverage by 2030.
100% autonomous. That's bold.
It is. And there's a great anecdote from a 2025 hackathon. Weingarten made a decisive call to pivot resources toward AI for zero-day threats that led directly to a new feature that autonomously stopped a novel ransomware variant for a Fortune 100 client, saved them an estimated $15 million. Really shows their commitment.
That's a powerful story. So how does this vision and culture translate into how SentinelOne actually brings in revenue and delivers its tech?
Okay, so fundamentally, SentinelOne sells software that safeguards digital environments. Think of it like a super intelligent home security system. It doesn't just sound an alarm. It automatically spots the intruder, locks them out, and even fixes any damage, all without you doing anything.
So fully automated protection.
Exactly. The real innovation, the complexity, lies in their behavioral AI algorithms. They don't use old-school virus lists. Instead, these algorithms learn from billions of real-time events across endpoints, using predictive models to anticipate and stop threats.
Like a chess grandmaster AI versus someone just following the rules.
Precisely. A great analogy. And this is all integrated into their XDR, Extended Detection and Response platform. It pulls data from everywhere in the network to make smarter autonomous decisions.
Can you elaborate on their main product and how well it's doing in the market?
Their flagship is the Singularity Platform. It's a unified AI-powered XDR solution. Covers EPP, EDR, cloud workload security, even identity threat detection. All in one place. And it's found remarkable product-market fit. Over 13,500 customers by mid-2025.
Including big names.
Oh yes, 20% of the Fortune 500. And their churn rates are consistently below 5%. Very sticky. The autonomous features are the core value. AI agents run directly on devices, threat hunting, rolling back malicious changes, fixing issues often without needing constant cloud connection. We saw this in a 2025 case study. Autonomously stopped a supply chain attack for a global bank, prevented maybe $20 million in losses.
That's a tangible benefit. What about recent developments? Any new products making waves?
Yes, in Q2 2025, they launched the Singularity Cloud Native Application Protection Platform, or CNAPP. That significantly boosted their cloud adoption, grew 35% quarter over quarter, and brought in 15% of new AR.
15% new revenue from a single new product. Strong launch.
Very strong. Looking ahead, their roadmap is all about expanding these AI agentics, more predictive analytics, aiming for full-stack autonomy by FY 2027. And the impact is real. After launching Purple AI, customer satisfaction scores jumped 25%. One healthcare provider reported a 40% drop in alert fatigue. That's huge for overworked security teams.
40% less noise. I can see why that matters.
Absolutely. And this whole model is built on SaaS software as a service. High gross margins, typically around 72%, with a strong focus on predictable subscription revenue.
That's a powerful setup. What truly sets SentinelOne apart in such a crowded field, and how did their journey shape where they are now?
What makes them unique? It's their mastery of AI autonomy, no question. They use a single agent architecture, lightweight AI deployed right onto the endpoint.
So the intelligence is local.
Exactly. That means instant autonomous response. The AI is right there, acting immediately. Their systems process billions of events daily, constantly training those AI models faster than threats emerge. Remember that widespread phishing campaign in 2025? Their platform autonomously isolated infected devices, orchestrated defenses across the network, got operations back in minutes. Rivals took hours.
Minutes versus hours. That's a massive difference in a crisis.
Huge. And this capability strengthens their MSSP partnerships, managed security service providers. They now bring in 25% of SentinelOne's revenue, offering AI managed services. We saw a manufacturing firm cut security ops costs by 50% thanks to this automation.
50% savings. Speaks volumes. Can you walk us through their journey? Key moments.
Sure. Founded in 2013. A key early milestone was a 2019 launch of Singularity EDR, a big shift from old signature-based methods. Then the big 2021 IPO, valuing them at $10 billion. They've also made smart pivots. The 2023 shift to XDR via the Ativo Networks acquisition, and the 2025 PingSafe buy for cloud-native AI.
Strategic acquisitions bolstering their platform.
Precisely. And it shows in the financials. Revenue jumped from $422 million in FY24 to $621 million in FY25. That's 47% growth. ARR hit $860 million, up nearly 30% year over year. Market share in endpoints climbed to 12%, according to IDC in 2025.
12%, sure, significant player.
Absolutely. And they've shown resilience. After that major CrowdStrike outage in 2024, SentinelOne's autonomous rollback feature gained serious traction. They added 2,000 new customers.
Ah, so that event was actually a catalyst for them.
It really highlighted their architectural difference. Combine that history with their 115% net retention rate. It clearly shows their adaptability and that pioneering role in AI autonomy.
It's fascinating how these decisions translate globally. Where and how does SentinelOne actually operate, and how does its structure support this autonomous vision?
Their global setup is pretty smart. HQ in Mountain View, California for strategy and U.S. sales. But the main R&D hub, Tel Aviv, Israel, that's strategic, taps into that elite Unit 8200 talent pool for AI development.
Leveraging specific talent hubs. Makes sense.
Right. They also have key offices in London, Singapore, Boston for market expansion. Generally, lease facilities, good cost flexibility. They keep core AI and software dev in-house, but smartly outsource cloud infrastructure to AWS and Azure. Efficiently manages those petabytes of daily threat data.
A lean physical footprint, strategic innovation centers. How about vertical integration and distribution? How do they own the process?
They're partially vertically integrated. They own the crucial parts. The proprietary AI engines, the data pipelines, the brains of the operation. But they partner for hardware and broader cloud distribution. It's a hybrid approach that boosts efficiency. That in-device AI reduces response latency by 90% compared to cloud-reliant peers, cuts endpoint costs by 20%.
90% faster, 20% cheaper per endpoint. Powerful combination.
Very. And their in-house models integrate seamlessly with acquired tech like PingSafe's cloud scanning. It creates a unified experience for the customer.
And how do they get this tech into customers' hands?
A smart mix. Direct enterprise sales for large accounts, plus a really robust channel ecosystem. Over 1,000 resellers, MSSPs like IBM and Deloitte. Many partners offer their own AI managed services built on SentinelOne's platform.
So partners are building businesses on their tech.
Exactly. Online sales via AWS Marketplace are also significant. Their free trials convert at 45% very high. That 2025 CNWP launch, 25% of new deals came digitally. This multi-channel model works well, with channel revenue now hitting 60% of the total.
That diverse distribution must help with revenue predictability, too.
Absolutely. Predictability is exceptionally high, 98% recurring revenue from 2-3-year subscriptions. Their current RPO remaining performance obligations, basically future locked-in revenue, is $1.2 billion, up 25% year over year.
$1.2 billion in committed revenue, that's a strong foundation.
Very strong. Signals solid future income from blue-chip clients like AstraZeneca.
Now, for you, the individual investor, this is where it truly gets compelling. We need to understand what actually protects SentinelOne's market position. What are its unique competitive advantages, its defenses?
Right. SentinelOne doesn't have a full monopoly in the broad endpoint security market. The market's huge, $27+ billion in 2025, heading towards $38 billion by 2030. But, and this is key, it shows pronounced near-monopolistic characteristics, specifically in AI-driven autonomous threat detection and response.
So dominant within that critical niche.
Exactly. While they hold about 12% overall EDR/XDR share, trailing CrowdStrike and Microsoft Defender and FIs, their leadership in AI autonomy is where they shine. The 2025 Frost Radar for endpoint security, for example, gave them top marks for innovation and growth specifically in this area.
What makes it so hard for others to just copy them? What are the barriers?
Several big ones. Over 200 patents on our machine learning algorithms for behavioral analysis and autonomous remediation. Building similar AI cost upwards of $100 million. That's a steep climb for newcomers.
The IQ moat is strong.
Very. Plus, regulatory advantages. Certifications like FedRAMP High, SOC2 Type 2, compliance with GDPR, HAPA, PCI, DSS. These give exclusive access to government and regulated sectors. Their financial strength helps too, 72% gross margins. Nearly 30% RR growth provides staying power. And performance proof. 100% detection, 0 delays in the 2025 ITER 18CK evaluations. Outperformed CrowdStrike there.
Perfect score in MITRE is impressive.
It is. But again, the overall market is fragmented. A true winner-take-all across the entire landscape. Unlikely.
Those are clear differentiators. How does their growing scale benefit them? Economies of scale.
Absolutely. With over 13,500 customers now, their expanding operations drive down costs and boost efficiency. That massive data set from trillions of endpoint events annually, it cuts their per-unit AI processing costs by 20-25%. Automated platform updates cut R&D overhead, helping improve operating margins. Allows for competitive pricing too, often 15-20% below rivals for similar features.
Efficiency gains passed on partially to customers.
Right. And that on-device autonomy cuts bandwidth and latency costs dramatically, up to 80%. Response times, as we said, up to 10x faster in recent cases.
That makes sense. What about network effects? Does the platform get smarter as more people use it?
Yes, indirectly but powerfully. More users mean more data. More data means smarter AI, better threat intelligence for everyone. That growth from 11,000 to 13,500 customers in 2025 alone improved detection accuracy by 22%.
So the AI genuinely learns from the expanding user base.
Correct. Features like shared threat hunting enable proactive defense. We saw a financial firm use this network intelligence to stop a zero-day exploit, cutting investigation time by 40%. The XDR integration, pulling telemetry from everywhere, amplifies this effect for all users.
And how do they specifically position themselves against the big competitors?
Strategically, by emphasizing that kernel-free, fully autonomous AI. It's hard for rivals with cloud-centric or older signature-based models to replicate. Their 20% better autonomous response scores in the 2025 MIT or E tests highlight this. Purple AI's agentic workflows offer instant machine-led actions, directly countering frameworks that might still need more human steps.
And that CrowdStrike outage example really drove this home.
It was a stark illustration. SentinelOne saw an 8–10% stock surge, inquiries flooded in. Enterprises, including airlines, switched specifically for the safer non-kernel architecture and the autonomous rollback. In head-to-head pilots, SentinelOne showed 50% less alert fatigue and 30% higher adoption rates.
So switching away from SentinelOne must be a real headache for customers. High switching costs.
Extremely high. Financially, it can cost $500K to $1 million for a large enterprise just to migrate. Logically, the deep AI embeddings create data silos. It's tough for alternatives to re-baseline threat intelligence effectively. And emotionally, IT teams get attached. 85% cite operational dependency. They just rely on the autonomous ease.
Operational dependency. That's sticky.
Very. The unified XDR platform amplifies this moat, driving that 115% net retention. A 2025 healthcare provider cited $2 million in potential switch penalties as a reason not to move.
Beyond the tech, how strong is their brand?
They've meticulously built a powerful brand as the innovator in AI-powered cybersecurity. This lets them command premium pricing, 20–25% above average, and builds loyalty. Reinforced by awards Best Endpoint Security, Best AI-Powered Vendor at the 2025 SE Awards, high Gartner Peer Insights ratings, 4.8 out of 5. Their marketing emphasizes AI autonomy, and it resonates. 40% of new customer site reputation is a key factor.
And what about unique assets they control? Cornered resources.
Key resources include those 200-plus patents on behavioral AM. It's a huge proprietary edge. Elite talent, especially from Unit 8200, they attract 20% more top engineers than peers. Exclusive AWS partnerships for AI SIEM integrations are critical, and their patented Storyline technology.
Tell me more about Storyline. How does that fit into their processes?
Storyline is a unique process refined over 12 years. It automates threat storytelling and remediation with 99% efficacy. It doesn't just detect, it reconstructs the attack narrative and automatically acts to stop it and clean up. Big cost and quality advantage. Reduced op cost by 50% for clients in 2025 manufacturing cases. Their proprietary tech, Singularity's AI engines, deliver 10x better performance in autonomous detection response. Purple AI aims for 100x improvements by 2030. And those patented algorithms process endpoints without kernels, achieving 0 delays in IDRE tests.
All sounds incredibly advanced. Was their timing also lucky or strategic?
Both, really. Founded in 2013, perfect timing with the AI boom and the explosion of cyber threats post-mobile era. Capture that crucial first-mover advantage in autonomous security just as remote work and cloud adoption surged. Fueled that 47% FY25 revenue growth.
So they built their data advantage early.
Exactly. Accumulated data and refined models before many competitors fully shifted to AI first. They also excel in execution speed, launching features like SceneAPP in under 3 months, pushing AI updates in hours. Very agile.
Looking at these formidable advantages, how long can they last? How sustainable are these moats, and what could erode them?
Highly sustainable, likely for 7–10 years. Backed by that heavy R&D, spend 25% of revenue, $155 million in FY25, and patents extending to 2035. The 98% recurring revenue model adds stability.
But not invulnerable.
No moat is absolute. Potential erosion could come from AI commoditization via open-source, disruptive tech shifts like quantum computing breaking encryption, new entrants using cheaper LLMs, or restrictive regulations like the EU AI Act impacting data use. and competitors like CrowdStrike and Microsoft are chipping away at market share. That's a reality.
Understanding those powerful defenses, let's shift focus now. What's next? What are SentinelOne's growth plans and how much market is still out there?
Their growth strategy is multifaceted. Organic expansion is huge. Upselling things like Purple AI to their 13,500 plus customers drove 40% of recent AR growth. Market penetration, winning competitive deals against rivals like CrowdStrike with win rates over 30%, boosted by those MI-tier results.
Winning head-to-head.
Yes. Geographic expansion 2. EMEA, APAC drove 35% year-over-year revenue increases in Q1 FY26. Product development continues. Those 2025 launches like cloud-native security, AI, SIEM on AWS, boosting cloud segment growth by 45%. And strategic acquisitions expect more bolt-ons, perhaps in identity security, like the PingSafe deal. All this is fueled by rising cyber threats up 30% annually and growing regulations demanding better security.
That sounds like an aggressive expansion plan. What's the total market size they're targeting?
The total addressable market, or TAM, is big. $27.46 billion in 2025, projected to hit $38.28 billion by 2030. Growing at over 6% annually, it breaks down into segments. EDR is 40%, cloud workloads 30%, identity 20%, emerging IoT 10%, and the customer mix within that TAM.
Enterprises are 60%, SMBs 25%, government 15%. SentinelOne's FedRAMP compliance helps in that government slice geographically. North America 45%, EMEA 30%, APAC 20%. Their aim, capture $2-3 billion in revenue by 2030. That's substantial growth from here.
Beyond the pure numbers, how broadly applicable are these solutions, and what factors, internal or external, could impact this path?
Very broad applications. Finance uses it for ransomware defense, cutting losses by 50% in some 2025 cases. Healthcare relies on it for HIPAA compliance via AI data protection. This versatility means massive reach, 13,500 customers across 100-plus countries, 50 sectors. Potential expansions look interesting too, automotive for connected cars, retail for POS security.
And operationally, how diverse are their supply chains and customer base? Is there concentration risk?
Supply chain is moderately diverse. Multi-cloud reliance on AWS Azure for 70% of infrastructure. R&D split between the U.S. and Israel helps resilience. Redundant data centers ensure high uptime, 99.99%. And that hybrid on-device AI reduces cloud reliance by 80%, adding another layer of resilience.
What about customer concentration?
Customer diversity is a real strength. Well spread across industries. Finance 25%, tech 20%, healthcare 15%, manufacturing 15%, others 25%. Geographically diverse too, North America 50%, EMEA 30%, APAC 15%. Crucially, no single client has more than 5% of revenue. Very stable. They have nearly 1,500 large ARR customers, over 100K, up 22%, driving that 115% net retention.
Given all this, how likely are they to remain relevant long-term? What are the key drivers and risks?
We estimate an 85% probability of long-term relevance. Cyber threats aren't going away, projected 15% annual increase to 2030. Their adaptable AI is built for this evolving landscape. They've also shown resilience in downturns, growing 20% even in recessions.
What will drive that growth?
Key drivers are AI innovation, especially Purple AI adding maybe 30% new revenue, enterprise adoption, Fortune 500 up 20%, the cloud migration tailwind driving 45% segment growth, and partnerships like AWS boosting deals by 25%.
And the main risks to watch?
Intense competition from CrowdStrike, Microsoft, potential 10% share erosion, market saturation in mature endpoint segments, slowing growth perhaps to 15%, economic pressures causing IT budget cuts, maybe 5-10% in 2025, and regulatory hurdles like the EU AI Act, potentially increasing compliance costs by 8%.
How do broader macroeconomic factors play into this? Interest rates, inflation?
Higher interest rates have moderate impact. They have low leverage, debt to equity at 0.2x, and a $1.1 billion cash buffer, so minimal effect there. Trade tensions could disrupt supply chains, but diversified sourcing mitigates that. Inflation squeezes margins, talent server costs, but their pricing power, 20% premiums for AI, and efficiency gains largely offset it.
Any company-specific macro impacts?
Interestingly, stricter regulations like the 2025 EU AI Act could actually boost demand for compliant autonomous tools, maybe a 15% revenue lift. And economic slowdowns. They cut IT spending, yes, but also heighten cyber threats, which tends to favor essential security like SentinelOne.
For you, the individual investor, the numbers always tell a compelling story. Let's dive into SentinelOne's current financial health and market sentiment.
Okay, looking at Q1 FY 2026 financials. Revenue was $229 million, up 23% year over year from $186 million. Solid growth reflecting demand for that AI autonomy. Gross margins are strong at 73%, up from 71%. Operating margins are still negative and at 18%, but definitely improving. They're aiming for profitability by FY 2026.
Improving margins, path to profitability, important signals.
Absolutely. They score well on the rule of 40%, hitting 48%, 23% growth plus 25% adjusted margin. Excellent for an AI growth firm. Return on invested capital, ROIC, is 13%, up from 10%, showing efficient capital use. Balance sheet looks healthy, $1.2 billion cash, up 5% quarter-over-quarter. Current ratio 2.9x. Debt to equity just 0.2x. Solid buffer.
Strong cash position.
Yes. Book value growth is strong too, up 25% FY to $1.1 billion. And critically, free cash flow turned positive. $15 million in Q1 FY26. That's huge, up 70% from negative, unlocking M&A flexibility.
Positive free cash flow. That's a major milestone. How do they stack up against peers financially? And what are the trends?
Compared to peers, that 23% revenue growth actually topped CrowdStrike's 22% in the last quarter. Margins still lag CrowdStrike's 75% though. But valuation-wise, SentinelOne looks undervalued, trading at 6x sales versus peers closer to 9x. If AR is 6.5x versus peer average 815x.
So faster growth recently, but lower valuation multiple. Interesting disconnect.
It is. The trend over 3 years is clear. Revenue CGR over 30%, margins expanding 5-10% annually. Path towards profitability by 2027 looks credible.
What are the latest events impacting them? What should investors watch?
Recent events. Q1 FY26 earnings beat EPS estimates. Successfully defended against a major China-linked hack in June 2025. Real-world proof. Won Best AI-Powered Vendor at Cyber 2025 Awards. Upcoming, Q2 FY26 earnings in August. Potential M&A activity, markets watching the impact of their AI SIEM integration, any regulatory boost, or any stumbles from competitors like CrowdStrike.
And the general chatter, market sentiment.
Sentiment on social platforms is generally positive, maybe 60% bullish. Bulls focus on AI growth, the undervaluation. Bears worry about competition, the path to profitability. Focus is definitely shifting towards sustainable profits now.
Let's bring it all together. What does this comprehensive picture mean for SentinelOne's valuation, and what's the core thesis for you, the individual investor?
As of mid-July 2025, SentinelOne's trading around $17.80 per share, market cap roughly $5.92 billion. Year-to-date return is about 20.34%, outpacing broader markets, helped by the recent cyber sector rebound. This price looks like an accessible entry point, especially since it's below average analyst targets of $25-30. Suggests potential upside.
That brings up the idea of margin of safety. How does that apply here?
Excellent point. Margin of safety, Benjamin Graham's concept, is vital for growth stocks in risky sectors like cyber. Buy at a significant discount to intrinsic value, ideally 30-50%, to protect against errors or volatility. For SentinelOne, if that winner-take-all idea doesn't fully pan out, this buffer is key. At $17.80, it seems to be trading well below a reasonable intrinsic value range of $25-30, offering that margin of safety.
Why is valuation so critical here?
Because it tells you if the stock's potentially overvalued, undervalued, or fair. It grounds your buy-sell decisions by comparing future potential cash flows to the current price. Especially crucial when AI hype can inflate multiples.
So how would you value SentinelOne? What's the approach?
A hybrid approach makes sense. Maybe 60% intrinsic, 40% relative. Intrinsic using a DCF model. Assume 25-30% revenue CAGR through 2030. Operating margins hitting 25% by FY27. FCS margins at 20%. Discount rate 10-12%. That points to an intrinsic value of $28-35 per share.
$28 to $35 intrinsic value range.
Right. And relative valuation confirms it looks undervalued. 6x forward sales versus CrowdStrike's 12x, Palo Alto's 10x, EVE at 6.5x versus peers at 815x.
Let's crystallize the debate. What's the strongest bear case versus the strongest bull case for SentinelOne?
Okay, the bear thesis. Insurmountable competition in a saturated endpoint market erodes their AI edge. Profitability remains elusive due to high R&D, 25% revenue, and stock-based compensation dilution, 10% annual share increase. CrowdStrike scale, 15% share versus 12%, and Microsoft's bundling squeeze margins, leading to persistent losses, $300 annually. Churn risks exist post-rival outages, add macro IT cuts, regulatory hurdles, EU AI Act adding 8% costs, M&A integration risks. Bears see downside at $10-12.
A tough outlook. And the bull case?
The bull thesis counters. SentinelOne's AI autonomous platform, 10x faster responses, 99% ITE efficacy, is the future, driving 30% plus growth, $1 2B revenue by FY27. Significantly undervalued at 6x sales versus peers 10x plus era, poised for 2x market cap growth. Positive free cash flow, 115% net retention, huge TAM capture, 38 BB market. AI tailwinds, purple AI adoption, post-CrowdStrike wins, fuel profit growth maybe 77%. Bulls target $22 plus era.
So bear versus bull, which outcome seems more probable right now?
Considering everything, the bull thesis appears more probable. The AI traction is real, industry awards validate their tech, Best AI Vendor 2025, and the current undervaluation relative to peers seems significant. These factors seem to outweigh the risks in what remains a growing, not winner-take-all market. So based on today's $17.80 price and that probable bull thesis, SentinelOne looks like it's trading at a 35–50% discount to its intrinsic value range, $28–$35. That offers a compelling margin of safety for you, the investor, if you're bullish on their AI autonomous potential, even without expecting complete market dominance.
So let's finally answer our big question. Does SentinelOne truly hold the throne, or is this a battle royale? What's the ultimate takeaway for our listeners?
SentinelOne absolutely holds a substantial, though certainly contested, first-mover advantage in AI-driven autonomous threat detection and response, especially endpoint security. This comes from their 2013 founding focus on behavioral AI, enabling that fully independent on-device prevention and remediation.
The evidence supports this lead.
Clearly, processing over 1 billion attacks daily, 99% efficacy, 10 times faster responses than traditional tools. The 2025 MIRE results proved it. 100% detection, 0 human input needed. Innovations like Singularity Endpoint and Purple AI keep earning awards, like Best AI-Powered Security Vendor. Quantitatively, nearly 30% ARR growth to 816 hours, 115% net retention, 13,500 customers. Case studies show autonomous rollback saving clients $10–20 million per breach.
But the advantage isn't absolute.
Correct, it's not absolute. Competitors like CrowdStrike with Charlotte AI and Microsoft Defender have closed gaps. But SentinelOne still leads in that truly agentless, fully autonomous capability.
And the winner-take-all scenario.
Highly unlikely. The $38 billion 2030 TAM is too fragmented across segments. No player holds more than 20% now. Market dynamics favor winner-take-most for innovators like SentinelOne. They can capture 15–20% via AI tailwinds. But interoperability needs and regulations will likely prevent a true monopoly.
If we connect this back to the bigger picture for you, the individual investor, what are the core truths here? Where can you gain an edge?
Okay, from first principles. The core truth is that AI autonomy is the future of cybersecurity. It's irreducible. SentinelOne's 200-plus patents on on-device models create an asymmetric data moat from trillions of events. It's hard to replicate. And they'd be undervalued at 6x sales versus peers 10x. For you, the investor, prioritize watching AR feats targeting 30% plus growth signals, continued endpoint leadership.
What about the risks to monitor? Known unknowns.
Keep an eye on competitor AI leaps. CrowdStrike's post-2024 recovery could erode 5–10% share. Also watch for integration failures in M&A like PingSafe, which could stall growth.
And the unknown unknowns, the curveballs.
Consider the unforeseen. Quantum threats breaking encryption by 2030. Unexpected global regulations, maybe like the EU AI Act, but broader, fundamentally commoditizing autonomy. Those are the wild cards.
So where's the edge for investors?
Your edge lies in monitoring specifics. Customer wins after rival outages. That 20% inquiry jump in 2025 was telling. Diligent tracking of execution, and maybe a provocative thought. Consider advocating for Bitcoin as a treasury hedge. Its scarcity counters fiat inflation, aligning with SentinelOne's resilience focus, potentially strengthening long-term portfolio stability in volatile markets.
That brings us to the end of this incredibly detailed exploration of SentinelOne. We truly hope this discussion empowers you with knowledge, sparking new insights, and perhaps even guiding your next steps in the market. We'll be back soon with another exploration into the information that matters most to you.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.